the Johannesburg Stock Exchange this morning launched a new currency futures. George Glynos, he's the head of research at ETM Analytics for this particular interview. He joins us in studio to share his views of the new product offerings. George, thank you for making the time to join us. So in your traditional analytics hat, maybe just give us some insights of how is this going to work, who's involved, and what is the scope?
Right, so it's quite an exciting venture because it really brings to the JSE three new African currency FX pairs, the Nigerian Naira, the Kenyan shilling, and the Zambian kwacha. And effectively, there are three players involved. It's the broker, which in this case is Tradition. It's the bank that makes the prices behind the platform, which is of course Barclays, and of course it's the JSE's infrastructure that brings it all together. So between the three, we now have a platform whereby corporates, companies, or fund managers, hedge fund managers as well, that have exposure into those African countries can now hedge those exposures by accessing these African currency futures in such a way that it's anonymous. There's very clear and transparent pricing mechanism, so it's easy to price. And above all, it's a more sophisticated way of doing it. It's rand cleared. So ultimately, it's a very slick way for domestic companies that are doing trade or investments into these African countries to be able to protect their investments and shield themselves from the vagaries of currency volatility.
And of course, this isn't something that just happens overnight or over a week. I would understand that the three players have been working maybe in excess of a couple of years to put this together. Maybe let's go back to the rationale and the decision behind it. I mean, on the one hand, you've said it's about currency volatility, but I'm also getting a sense that there's a bigger story behind this, and I'm thinking a move towards the integration of financial markets on the continent.
Well, I think that's exactly right. So you're also correct in saying that this has been more like a 2-year process than it has been, just a few weeks of hard work, although that has been the case. It's very much a case of, and it was one of the questions that I sought to answer this morning is why now? What's special about this point in time? And I think you need to take a step back and look at it through a longer term lens, and you'll see that trade between South Africa and these three different countries has grown exponentially through the course of the past 10 years, to such a degree that we're now talking about total trade between these three countries and South Africa amounting to more than $10 billion per annum, which is a substantial figure. And so there's clearly a lot of trade that's taking place, but it's not just about trade. You can layer things like foreign direct investment over and above that, and fund exposure. So all in all, there's a fair amount of trade and business and cross-border exposures that are taking place. And so it's fitting to have on the JSE the ability for these players to hedge themselves appropriately in a sophisticated way, so as to be able to better expose themselves to these African stories.
Two questions, George. The first is, how did you arrive at the focus on these particular currencies? I mean, I know you've spoken about the growing trade, but also, is there scope for growth? As we seek to, increase the trade on the continent and increase market engagement across the continent, are we hoping to grow beyond the economic hubs that are already established on the continent?
So I think it's a good question. I mean, by all accounts, there are another few currencies that are in the wings, should this prove as successful as we hope it will be. But your question is a good one. Why these three countries? Well, Nigeria and Kenya are effectively in the top 10 of the biggest economies in Africa. So naturally, there's a necessity to be able to expose yourself to such dynamic markets.
With the Kenya rebasing their GDP as well.
Exactly.
Moving to the top 10.
Exactly. Yes. Quite right. And so in terms of Zambia, if one has a look at the amount of trade that Zambia does with South Africa, it's actually quite significant. It's in the order of around $3.5 billion per annum, which is not insignificant. So it's a combination of size. It's a combination of the amount of trade that gets done with with South Africa. And over and above that, it's also about economic complexity. So by economic complexity, I'm talking about the diversification of trade. Now, that's maybe narrowed up a little bit in the past couple of years, but we're talking about 3 economies that have some economic diversity, perhaps more than some of the other countries on the African continent. And all of these total up into fairly good reasons as to why these 3.
And a final one, how will trading fees be charged? How do we get to that particular number?
Well, it's your JSE fees that you will be paying, very much in line with normal trades that take place through the JSE. Then you'll have your broker's margin that is added to that alongside any margins between the bid-offer spread that the bank behind the platform would offer.
George, thank you for making the time to join us. George Glynos in his capacity as the Head of Research at Tradition Analytics.